Alrighty, traders, good afternoon, good morning, good evening, and welcome to the AAA session here with my good friends Tyson and Chris. We're going to be taking a look at the markets this week and giving you our input as to what we're thinking going to move the market. We've got currency pairs we want to talk about. We've got stocks we want to talk about. We want to talk about the stock market versus the currency market and how that's flowing. Chris has got a lot of input on that he wants to talk about today. A lot of stuff happening. We've got two fundamentals coming out this week that our eyes are on. We got the New Zealand rate decision, and we got Aussie jobs coming out on Wednesday. How is that going to move the market, and what are we going to be doing on the currency pairs that we're really focused on? So with that being said, welcome to the session once again, and we're going to go ahead and introduce the panel. The panel is, of course, my good friends again, Tyson and Chris. Chris, how are you doing this morning, and are you ready to rock and roll this morning? Oh, this afternoon.
I'm doing great this afternoon. Hey, Gary. Nice to be with all of you. Happy Monday. It was, well, it all blends together now that we're all just hanging out at home all the time. But nice to be with everybody. Looking forward to a great session.
Absolutely. And Tyson, you got a lot to talk about today as well, right?
We do, yeah. It's going to be a fun session. Happy oxymoronic day, we'll call it. Oxymoronic market. Right? Right. Crazy. Right, well, a lot of good movement, a lot of good opportunities.
Yes. Yes, it is. Yes, it is. Absolutely. And so let's get this started. We got 30 minutes to crush this out, and we want to make sure that we give enough information for the students to be able to understand exactly what our thoughts are, but also put in perspective with regards to the news, the technicals, and then, of course, the decisions we make on that. So I want to start off with Tyson. Let's go ahead and kick off with you, Tyson. Go ahead and give us some input as to what do you think is happening this week in the market that you want to focus on, and then what the currency pair that you want to focus on, and let's go ahead and dig into those details.
Yeah, the focus for me is pretty simple. It's we're digesting a lot of information right now, and we were just having a conversation before we kicked this off about what we're seeing in the overall markets is capital has to flow someplace, right? It's circular, it goes somewhere. And what a lot of people forget is these money managers, these hedge funds, they have a mandate to try to buy they have a fiduciary responsibility to do what's best in their client's standpoint. But where do you put assets? That's the big thing I'm focusing on. Where do we actually put assets for the biggest returns right now? We got to be selective about what we're playing in, and we got to watch the news. So as you mentioned, we've got the Aussie fundamentals coming out this week and New Zealand fundamentals. We had the big jobs number last week. What does that mean? So those are the things that I'm paying attention to. But I was telling Chris, I was telling you, Gary, that some of the things I'm doing is I'm looking for things to buy. And currencies, we'll talk about that in a second here, but I'm looking for specific stocks and different things to buy, but I want to be cheap. I want to buy them at prices that I'm willing to buy them at rather than prices that the market's telling me I should buy them at. So we'll get into that. But one of the currency pairs that I love is the Aussie dollar. We're going to talk a little bit about that.
Before you get into the currency pair, I know the Aussie US dollar, before you get into that, just want to add Chris to add onto this right here, because Chris mentioned something interesting which we spoke just before this session started, about stocks and currencies and how they are moving in opposite direction. Chris, you want to go ahead and elaborate more on that?
Sure. So really what I was saying is last week, I think that it was kind of palpable for every investor or anybody watching to kind of realize that stocks do not necessarily equal the economy. So, we have watched over 20 some million jobs go away in the U.S. We're at 14, 15, 16%. Some would even argue like 20+% actual unemployment in the U.S. And yet the stock market is still in this recovery mode from April. And again, it's a low volume. We can talk about the reasons why. But the currency market, look, I put together this Japanese yen prediction. We as a team talked about it. And I think it's a matter of when. And so last week we had good validation. I was short on the Japanese yen. I was looking at Aussie yen short, Euro yen short, pound yen short, dollar yen short, all were taking off, starting traction. And then last week, Friday, we had non-farm payroll. The stock market didn't care. The stock market rallied. The Japanese yen got weaker. We started today's session, the Sunday open for brokers. And when, the Asian market first opened, we saw the Japanese yen be the weakest currency pair. So, as far as what we're looking at, I think that Tyson, you and I and us as a team, we're certainly anticipating what we think is likely going to happen. I can't I mean, I'm not saying that we can't recover, but like we're looking at the NASDAQ recovering 80% of the March sell-off. We look at the S&P and the Dow Jones that are right around that 50 to 60% recovery rate. But it's a low volume drift. There's certainly no confirmation and no catalyst that's bearish right now. So that is creating a divide in the currency markets because our risk off currency pairs are not showing that elevated strength that we're used to seeing. So, I think that we have the right direction. I think we are trading kind of anticipation, but I've already told traders this week in my weekly outlook that, look, I ended up taking some small losses on Japanese yen pairs because I'm trading on a robot. And look, the one thing I'm not going to do is level myself to the yen pairs and make this big bold, like call this big area and play a wide trading range. I'm trying to be right on confirmation. And I know when the yens are correct and we get the wave of yen strength, it's going to be fast, furious, bear flags, and we're going to be just jumping on the coattails of the momentum. So that's the disconnect that I'm seeing between currency pairs and the stock market. And like I said, I think it's really obvious now to anyone watching. I mean, when I have friends of mine that are barely invested in the stock market or barely watching, and they're like, how do you make sense of this? I mean, people are starting to notice, like, you can't have 20 million jobs lost. You can't wipe out a decade worth of job growth and think like everything's fine. So as they say, the stock market does not not reflect the economy. And that is more true now than ever before. So, but again, as Gary would say, well, how do you trade it? The answer to that is you have to trade confirmation, and we don't have it. We don't have the catalyst. We don't have the confirmation. So we wait and we game plan with what we can trade, which is what we're going to talk about today.
Yeah. Can I say something real quick, Gary, about that? I think just, again, this is my PSA. I think Chris is spot on with everything about that. I am a big fan, and I think I'm going to be a big fan all year long. I'm not afraid to miss some of the upside because I'm very, very confident that I'm going to be able to buy the stocks I want to buy at the levels I want to buy them at. Part of the reason why, guys, we got to remember that we have pretty much lost about $1 trillion worth. Now, I know we have the Fed coming in and buying a bunch, but we've lost about $1 trillion worth of natural buyers in the market with all these corporate buybacks being gone now. And then what we've got to figure out is this opening up of the economy is really, really great, right? It's really good news. But we got to figure, are we going to see consumption come back right away to the levels it was? And if it wasn't, can the economy actually roll with a lot less in the labor force? So think about this. Maybe the unemployment rate, some people are saying, well, it's not, maybe it's 15, 16, 17% now, but it's not going to be. Okay, is the new level 7, 8, 9%? If it is, that's an issue. So these are the things that we got to work out. So again, I think the big thing that I'm going to stay on, and we got to wait for these confirmations, but it's be frugal. Be frugal, raise cash. Most importantly, and I think Chris nailed it, is if you can, be nimble. Be frugal and nimble. Don't get so tied up or married into a position. Be willing to change and shorten up your time frames. If you are actively trading, shorten up your time frames to generate some of that income. We've been talking about a lot of that within the webinars also, generating that income and making sure that you're nimble enough to take advantage of what is happening right now. So I like the fact that you had this plan of the Aussie yen, you took some stops, but it hasn't deviated your plan. You're eventually, you're like, hey, we're going to be right on this, but let's wait for those confirmations. And it's being disciplined, waiting, and then knowing when to jump in and really take advantage of that. So great job, Chris.
Yeah. And I got to add to this as well and say this. And this is I know what Tyson, you're looking at an Aussie cross. I'm looking at an Aussie cross at the moment right now. But jobs are coming out on Wednesday. And to your point, with regards to how the market's been reacting with regards to jobs, the thing is this. Is the second wave going to be as big of a wave that we had the first wave? Because I anticipate there could be a second wave. And the problem here is the market on pause right now to see how the reopening, because this week is reopening the economy, right? Reopen the economy to the world and so on. And so as we start opening things and each state starts opening things here in the U.S., is the numbers really on pause right now to see how we anticipate, or at least how we get through a possible second wave? And if that second wave is going to put them back into lockdown again, back into closing off the states again to avoid any sort of higher numbers. So I don't know if it is a situation where we may need to wait until the second wave comes, if it's going to come, to see if there's any sort of higher numbers to anticipate what the economy or what the stock market's going to do based off that.
Yeah, and I actually, again, I don't want to keep beating this, but I actually agree with you. I think the market is, well, I know it's a forward-looking mechanism, and so what I think it's looking at is let's say we reopen up and the second wave isn't quite as bad and we get things back to normal fast forward a year from now, and I think the market's fairly priced right now. If we're out forecasting 1 year, 2 years from now, I think it's fairly priced at a 10% from peak to kind of where we're at. However, I'm not in the camp that I don't necessarily think it's gonna be all rosy like that. That's kind of a base case, right? Everything kind of opens up and we eventually get out of it. It's fairly priced. But we also have an election coming up. We also have other things that are going to cause some volatility that we need to pay attention to. But I think you're right. It's kind of that wait and see scenario that we're in right now, Gary.
Well, because I think everything's being priced in as if we're going to come back and everything's going to be hunky-dory again.
Correct.
And things going to really be good in the economy again and things going to pick up again. I don't know if that's just a false sense of hope that we're anticipating this, and if it doesn't happen, how dramatic can it be to the market then at that point in time? But again, I wouldn't trade anything based on just confirmation, and we all know that, right? You get the news does whatever it needs to do, and then you trade based on confirmation in the direction of the trend that you're trading. So if it happens, if it doesn't happen, it really doesn't matter to a technical trader, because technical traders don't trade on what they think is going to happen. They trade on what's confirming that's happened. So it's just a matter of waiting to see what happens. But I always like to go ahead and talk about these things, anticipate what we're going to anticipate, but only react once the market confirms it, or at least the price confirms that yes, we actually have a trading opportunity. So now on that point, Tyson, back to your Aussie US dollar pair. That is the pair you're focusing in on this week. Give us some details of what you're looking at.
Yeah, actually, and it kind of plays right into that confirmation theme. It's setting up right now at what I think is a brilliant level. And if we pull up the charts here, we've got a longer-term down AB going back about a while, going back 2 or 3 months from here, from that first kind of flush down in mid-March. That created just this big AB down. We've got a deep retracement in that we're in this push zone. And then also we have this up AB right now that doesn't have a 382 retracement. And we know that there's high probability of us retracing to different pivot levels, 382 retracements. So my overall target, I am a bear on this. And I think I've been on this theme of, I believe that what we got in April, right? That push up that we got in April, I think is going to be mimicked just on the downside in May, or over the course of the next few weeks. And so I'm looking at a target of right around 59.43 is my kind of exact target. And that's a 382 retracement of a smart Fibonacci up AB. So 59.43 is my target. Now, here's the conservative way to trade this. There's a really nice risk versus reward trade. If you wanted to, I believe the high, I'm very confident that this high that was put in late April, that April 29th high, I believe that's going to hold. Now, my stop is actually above the March high, so it's at 66.85. However, again, if you want a trade that offers amazing reward versus risk, I think that April high is going to be protected. So if you wanted to place a stop right around 65, it'd be about 65.75 or so. I think that's fair. But if I trade it that way, I would want to get in on confirmation. So here's how I would do this, and hopefully this makes sense. I'm already in this trade, by the way, full disclosure. If I weren't and I wanted to get a really, really nice reward versus risk trade, what I would do is I would use today's low price as my confirmation. So whatever today's low is, on a break below that low tomorrow, that's where I would enter. So today's low as of right now is 64.55. So or 64.56 essentially. I would put my limit order to enter at 64.55. I would place my target at 59.43, and I would place my stop at 65.75.
Let's get that entry points again.
If you do the risk versus reward on that, we're looking for 510 pips or so. and we're risking about 120 pips. So we're talking about a 4-to-1 risk versus reward trade that I think gives us pretty darn high probability of success. We've got price sitting pretty high on the curve. We've got price sitting in supply, plus a lot of Fibonacci's working in our favor. So again, just to recap, enter on today's. I'm going to look. I might add to this, but I'm already in this. But if I weren't, I would enter on a break below today's low at 60. What is that? 64.55. Target 59.43 and stop at 65.75. That would be my trade.
All right, good. I got that number there. All right, there. 65.75 is going to be the stop loss, and your take profit will be 59.
59.43. Now, here's the quick reason why I have my stop at 66.85. Again, full disclosure, is because of the fundamental announcements that are coming. I don't want to get whipped out of this trade only to watch it go my way. So what I've done is I've given it a little more room up to 66.85, which is still a good. It's still about a 2.5 to 1 reward in comparison to risk. It's not quite as good as putting your stop at 65.75, but it's still pretty good. So
Sure.
You got to decide what you want to do. Do you want to give it a little more room, a little more play to that downside, or do you really want to tighten it up to get that really great reward versus risk? I like both, but I've got my stop a little higher.
Yeah, and that makes sense. That makes sense. And protect yourself, and that's true. The news coming out today on Wednesday. It's going to come out on Wednesday. We don't know how the market's going to react. And yes, at the moment right now, it's holding. So let's put it this way. If we don't break through that low in the next couple of days and we get into Wednesday just before the news, what is your response to the traders right now saying, what is your action going to take? So what actions are you going to take if the news come if just before the news and we haven't taken out that low and created an entry point for you?
Great question. So it's very simple. On a setup like this, it's very simple. Just follow the daily lows. So my entry will be Monday on a break below Monday's low. If we don't break below that, my entry will be a break below Tuesday's low if we don't enter. So I'll just do that until we take out that 66.85 level. If we don't take that out, so basically if we get higher lows, I'm going to short on the break below as long as we don't take out 66.85.
Okay. 66.85 was it?
Yeah,
65?
that's my stop. That's my higher level stop, 66.85. However, remember I said that if you want a better risk versus reward trade, you could put your stop at 65.75.
Gotcha. All right, so 65.75 would be a tighter stop, but your psychological level where the market breaks
my
out
stop
is
level is 66.80 or 66.85. Yep.
66.85. Gotcha. All right, cool. All right, well, that's good. Chris, do you want to add something to Tyson's decision there?
I think it's great. I think that it's interesting that, last week we were talking specifically on Aussie pairs, Aussie CAD, Aussie Swiss, Aussie Yen, Aussie Dollar. And we were debating last week whether or not, we could sell it at the high from the week before, which was that April high. And honestly, it's like if we just poke those highs, which we're trying to, the Aussie Dollar did it, the Aussie Yen did it, we poke those highs. I like the disagreement that we're seeing on those higher time frames. So that momentum disagreement with price is giving me the confidence to look the same direction Tyson is. So I know that I mentioned earlier, I'm going to pick Aussie CAD, but I think, Gary, you're going to take Aussie CAD. I'll do something else. But it's, again, Aussie CAD looks great. Aussie Swiss looks great. Aussie Yen looks great. Aussie Dollar looks great. All those setting up with similar rising wedges. And I think bearish outlook is what we have. And I think that's that's easy trade
too. The way that this trade would turn in from a really, really nice looking trade to just in my opinion, just a jackpot would be if today's bar can close below Friday's low. If the close today is below Friday's low, that's a fully engulfing bearish bar. Let's start to rock and roll it down. I'm very confident that happens.
If we take away that price action from Friday, which I thought was like, whatever. This is clearly the market's not listening to the news or looking at the numbers. It's like it was just a run your stop type day, or like nobody's going to win type day, and everyone's confused. But here we are getting back to reality.
Yep. All right, so let's go ahead and take a look at while we're on the subject on Aussies. Let's go ahead and throw in my pair that I'm focused on this weekend, and Chris mentioned it, Aussie Canadian dollar. So let's go take a look at the Aussie Canadian dollar right here. And I want to focus in on, let's take a look right here. I want to focus on exactly the same thing as resistance on the Aussie CAD. And I have a lot of reason that I want to go ahead and buy and sell on this one right here. And it's coming off this big rising wedge right here. Now I'm going to go ahead and compress the charts right here, and you can see the bigger picture. The bigger picture is that we recently came out of this this consolidation right here, and price actually went ahead and broke out of the lows right here. This was a very strong support at that point, and that support was at 91.61. So you can check it out there. There's that 91.61 support. Now we've come back and we've retested it. This is a very, very key level. This is essential. If we break above 91.63, we're heading north. Now, why would we want to break above 91.63? Well, I'm seeing the possibilities that we may have it, and Chris and Tyson can add your value to this too as well, and your opinion to this as well. I feel that possibly we may have another safe haven currency pair that investors are running towards. Because think about it. Aussie has not been very weak over this period. In fact, we did initially have that sell-off, but then we've come back very strong and it's maintained itself. Despite of the bad news, despite of the news that's come out, they've cut rates, they've done everything, but yet this currency pair continues to push north. Now we have come to resistance, very strong resistance, at that 91.65 level. I think it is, what did I say, 95.63 level. So 91.63 level. So 91.63 level is a very, very strong level. Now, if the news comes out on Wednesday and that news is negative, which we are anticipating, they may have even priced it in already, which means it's not going to affect the market as bad. So if that doesn't affect the markets and we do start seeing a little bit of a push in Aussie and it gets above 91.63, I'm thinking there's more money that's going to flow into Aussie, because they are the one of the countries that may be seeing a quicker recovery through anyone else. With the stock market, yes, they've seen numbers down. Yes, they've seen labor market down. They've seen everything down, but yet the currency still keeps climbing up. And that would mean that more money is going to flow into that. And if we break above that strong support level, which is now resistance, then it goes back into the range. And check this out. If it goes back into the range, then we're heading all the way to the top of that range right here. And that is, in fact, let me go to the weekly. Maybe I'll see a little bit more clear what that looks like. Here, check this out. So we're going to move back into the range right here, and we could go all the way back up to a 1.0400, maybe 1.0600 in the midterm. But this is a very, very critical level right here that I'm going to be focused on. Now, what is my game plan? What is my game plan for this week? I'm going to look to sell, but I'm looking for confirmations. The only confirmation I have right here is a big rising wedge. Now, if this big rising wedge holds and maintains itself at the backside of that trend line, then I'll be looking for price to drop back down south. And if it means that the data is that comes out on Wednesday is going to push the market to the downside, I'm a big seller on Aussie CAD right here. But I'm going to, like Chris mentioned and Tyson mentioned too, confirmation to me is important. All right. And at the moment right now, I do see a little bit of divergence, not much, but a little bit of divergence appearing here on the daily. Oscillators moving south. We did pop up a little high. We actually got what we call a class B divergence, where we're hitting a flat at the top, but we're seeing momentum heading south. And that means that we are eventually going to see price break through that level. So I'm thinking that maybe, just maybe, because there's so much profit, Chris and Tyson, because there's so much profit down here, if the market hits down, maybe I should be waiting for this low right here to take out, all right, or at least be taken out before deploying any sort of automation in that direction. And so that's going to be my game plan this week, is that I'm going to say, I'm going to just stand aside because I have doubts whether or not Aussie's going to weaken. And the Aussie data coming out on Wednesday will be my confirmation. And if we manage to break through this level with a nice clean break of a daily candle, and that level is this one right here, this low, if we break through that low, that's going to be my big calling card right here to start throwing everything on the sells going south right here. But if we break through 91.63, I'm going to be a big buyer in the market and continue to buy along in that direction. So that's going to be my pivotal point right here. Waiting to see if we break through this level of support, which is at, what is that price at? Let's see here. We're looking at 90, let's
Right
call
on
it
9,000.
0.90 or 61.63. 61, sorry, 90, 91.63. So 91.63 and then 0.90. That's the two levels that I'm looking at right now. What do you guys think about that?
I think it's great. I mean, the thing that I love about it is you're trading this exactly the way I'm looking at my stocks. Is like, listen, let's let the market come to us, right? And let's not try to guess on what's going to happen. And here's the payoff, right? Or here's the I guess you got to make your decision. If you start to look, let's say you look at that chart and you're like, man, I really love the short, because I love the short side, Gary. I'm just like,
Sure.
man, this is looking awesome on the short side. I can start to jump in right now and start targeting the same target you have. And the benefit to that is I've got better reward versus risk. So that's cool. However, I have a lower probability of success because we haven't necessarily broke structure yet. So there's a payoff, right? So I have better reward, less risk, but lower probability. Whereas if I wait for the break, then I have less reward. So the reward versus risk is still good, just not as good, but I have higher probability. So I got to decide, what trader do I want to be right now? And I think the best way to do it, there's going to be opportunities. Let's take the high probability side. So I think you're doing it exactly right.
See, and bring it back, coming back to that, what you just said right now. You know, there's a lot of traders that have different approach to the market based on the situation they're in now. Some that have already made some profit this month, they're looking to be a little bit more conservative. They may want to wait for the breakouts and confirm that breakout. But there's some traders that have got some losses that they want to make up, and those traders are actually in a dangerous position, because what you're doing is you're forcing yourself to trade inside a range that hasn't confirmed the breakout, and so you're going to get chopped up and probably lose some more. And then by the time it breaks out, you've almost exhausted yourself, and you're too scared to get in because you've taken so many losses. So just be, I've been there. Just be careful that when you see these situations and you need to make up some trades, all right, based on some losses you already occurred, don't get yourself forced into a situation where it's not a good trading environment. And I believe that the Aussie Cat is superb to start looking for an opportunity, but I believe also that due to the news and due to what's happening right now with the Aussie currency, it does indicate that we could have a safe haven currency, which means that we could be a little choppy even with the news coming out. And so in order for us to be able to know for sure, we need the breakout to confirm the run. And there's a lot of profit to the upside. There's a lot of profit to the downside. But waiting for the confirmation is going to get us in and get us in with a solid trade.
So I'll say something real fast, just fundamentally speaking in long term. You look at a chart going back to 2008, 2009, and what happens is this, in the Aussie pairs, it's kind of interesting. The Aussie pairs get absolutely crushed at the first. When we start to fall apart economically, we have some bad news, we get a mass exodus from the Aussie pairs. However, then they create a floor and start to rally much faster and sooner than the markets. Why? Because governments around the world start to come in with infrastructure builds, and they start to put money into the economy. And a lot of that goes into hard assets and infrastructure builds and kind of building their economy. So currencies like the Aussie typically lead us out of these things. And so I like the upside if we break, because it could be a leading indication of what's to come in the next year or two.
Yep. And
I'm going to take a different stance.
Go for it, Chris.
I'm going to take a different stance and add to the Aussie CAD. I'm just going to say this. It's one of my favorite currency pairs. Doesn't matter on direction. You can find a way to win on the Aussie CAD as a buyer or a seller. It's two commodity pairs that are duking it out. We've got oil, we've got iron, we've got copper, we've got China, it doesn't matter. It's like the Aussie CAD is a great balancing act all the time. You can go back and look for the last 7-8 years. How many pivots got hit? Pretty much all of them. Look back to March's sliding coronavirus. How did it come back? The entire way. So even if we break above 91.60, if you're looking at bearish targets, it's probably going to get hit. If you're looking bearish right now, okay, I mean, I'm currently, I shorted it last week. We shorted it at 90.75, took it down for about 60 pips, closed out for profit. We shorted it last week, got filled at 9,100. I'm looking at a minimum for us to get down to at least 9,000. Even if there's chop, I'm hoping we can at least make it to 9,000. Ideally, I get to 88.50 or 8,800. So I'm not looking for big levels, but I think the Aussie CAD could easily give us 100 to 200 pips. Yeah. So I'm short right now just because of that rising wedge. We have kind of a double top situation. We have divergence. I like it's the same thing. Aussie Swiss, Aussie yen, Aussie CAD, Aussie dollar. They're all getting us those higher time frame divergences, which is price momentum disagreeing, and we have the rising wedge where we're just kind of drifting on the right hand side of that. So that confirmation is kind of leading the way for me. I know we don't have the push south yet. I know we have news on the Aussie this week, but Gary's showing right there, we've got nice targets below. It's one of my favorite target trading pairs. It's one of my favorite efficient currency pairs. It finds pockets, it finds targets, it finds it's Tyson supply and demand levels. It's just overall a great currency pair. So that type of, again, for me, it's a more flexible trading plan, but I think traders can make money either way. You just have to have a plan on the Aussie CAD and know what you're doing, because it does find a way to pay out nicely, and a ton of strategies.
Yep, absolutely. All right, well, let's go ahead and throw Chris. You have a currency pair that you want to focus on. What is it's Euro Swiss, is it right?
It's the Euro Swiss. So I'm going to grab an oldie but a goodie. This pair. So the hard part about the Australian or the Swiss, the Euro Swiss right now is if you look at a currency strength chart day to day, you're typically seeing the Euro and the Swiss in lockstep. If the Euro's strong, so is the Swiss. If the Swiss is weak, so is the Euro. And they're like that almost every single day. Now, a couple weeks ago, we went from the lows around, if you want to bring that chart up, Gary, I'll kind of walk everybody through it. We had lows around 105.20, 105.30. We popped up above 106. Then we dropped back down, found the same lows at 105.15, 105.10, popped back up to 106. We're back down to those lows again at 105. Now, I'm looking for a falling wedge. Gary, if you want to bring up, can you bring up like your right trader chart? I know yours might look a little bit different than mine, but I've given traders some really easy visuals on this on the daily time frame. So that's the best chart to go to, because we will see that all I'm looking for is price to turn. So in Gary's chart, if price turns green, I'm a buyer. So not only just a random color, well, Gary's got his aggressive. I know Gary's number on that. So I need to see, I'll say this. Everybody sees the blue lines. If we see a green candle on Gary's chart, above that blue line, okay, closing above that blue line, then I am a buyer to that higher moving average. That should be about 200 pips away, Gary. If you measure from the top blue line to that purple line, that should be about 200 pips. And if you look left on that chart, there's previous support right around 108, 108.10, and that's my level. So in the near term, I just need a bullish confirmation above 106.10, 106.20, and if we get a daily close above that in the open, I'm looking for about a 200 plus pip rally. I'm going to be very aggressive in that area. I've already told traders this is my room. If we get above 106.20, 106.30, I have levels. I'm looking at buy stop levels. Buy stop at 106.50, buy stop at 106.75, buy stop at 107.100, 107.25, 107.50. I'm going to take advantage of that area because, as Tyson said, trade probability. I think that's a high probability move, that we might not see the perfect movement from low to high, Fibonacci pullbacks, pivot pullbacks, all these great levels. It might just be a straight up move within a matter of a couple of days. So if and when we get it, I think it's going to move quickly. So I want to be in as a participant at levels that I'm setting up ahead of time. So
give me those levels again, Chris.
We'll say 106.50 would be pretty safe. So 106.50. And then to make it simpler for everyone, go every 50 pips, Gary, like 106.50, 107.100, 107.50. I'm doing every 25 pips for like 5 entries. So I've created a bit of a stack to the upside, because I think the probability is once we confirm above 106, we should be heading towards 108. A kind of ideal scenario would be that we go not just to 108, which is past support, but we blow through that and we start moving along towards the yearly pivot, which is at 110.45. And if we can carve some lows out at 106 and make a nice little rally towards 110, and let's say give it a 3-wave pattern, give it a 5-wave move. I don't care. However it gets there, it gets there. But if we go through 108, I'm going to take a lot of profit there at 108 and protect and open that margin back up and reapply it. But if we blow through 108 to 108.50, 109, I don't know why we can't go to 110, which are previous highs. And that gives the bulls, for once in the last year and a half, a chance to score a point around 110. So it's a wait trade. It's wait for confirmation, which is kind of the common denominator of all of our setups for this week. Is, look, we have some weird things happening. We have risk on and risk off. We have stock markets and currencies not quite matching up. We're talking about the 10-year note down below 1%. It's at 0.7. We have job numbers, which are abysmal from Canada to U.S. to Aussie. We'll find out on Wednesday. I can't imagine anyone's job reports are going to be solid for the month of April. And it's just a matter of how the market interprets it and how the market digests it and how price action moves. But on that particular pair, above 106.20 with a bullish confirmation, a bullish close, I think we can safely put in that bottom and go after that aggressive run towards 108. I'll say that's kind of trade one. If we can sustain that run above 108 and we start pushing 108.50, 109, I'm going to do my best to hang on to some extra profits and run into the 110. Ideally 110.45, which is my yearly pivot. So it's a trade that literally in January I was talking about. And I've been in it from 109 to 108 to 107 to 106. So I have positions in that regard. And now I'm looking at how can I build my way through additional profits, maintain that earlier kind of position and work my way through it. So there's short-term profits I can take. There's longer term I can sit on and build a better break even and try to get back to 108 minimum or ideally 110. If you give that currency pair time, I'm very confident that we do get to 110.
Okay.
I mean,
All right,
so that's the plan.
So I have a question for you. So you say, Chris, you've got already positions in already, right?
Yes.
So you want us to help you start pushing the market up so you can make some money. Is that what you
Absolutely.
want, right?
Yep. So if everybody jumps in and starts buying Euro Swiss, then it's going to be great for me.
Well, everyone, let's go. Everyone in on Euro Swiss buys. Let's go ahead and get some love here to show some love here for Chris. All right, so I actually agree. Chris, if you actually look at the chart right here, I actually am so much on the same page as you. My entry point may be a little weighted right now, and the reason why I'm a little weighted is because we've already been range bound on this. Like you said, we've seen this falling wedge, period right here. I believe we may just take out the lows here first before we start moving up. I'm going to be watching the oscillator though. I want to see the momentum continue to be bullish and then take out the lows, and then it's going to give me an indication that it's now time to start getting in, so I can get in a little bit of a better pricing on that.
Sure.
But I like it because if you look at my downward trend is showing a couple of things here. Firstly, number one, here we have the wave 1, we have wave 2, we've got down to wave 3 over here, and now we're at wave 5, which is at the 127. We've come at that very significant low that's come all the way back in 2000. What is that low there?
16, I believe. Probably 2016, 17.
17, yep, 2017. So around about the 2017 low, that's where we're testing and bouncing off. We break above that, it's definitely gone. And like you said, that's around about 106.22. That's where that low sitting. So your price at 106.20 going above that is solid. But I'm going to look to get in on this. I definitely want to look at you getting in on this. But I definitely want price to move down a little bit lower, maybe just to give us a final test of this trend line right here, and then start heading back up. So I want to buy down here, and I want to focus in on the oscillator to see if oscillator is going to push up. Right now, if you look at the oscillator, it's not giving us a whole bunch of momentum to the upside. It's actually telling us that we're pretty much range bound because it's hovering here at the 0% line right here. And the falling wedge just confirms that, yep, it's indecisive right now as to what it wants to do. But the breakout, I agree. Breakout's going to be to the north side because we're at the bottom of the trend line, and we should be looking for price to move back up again. And I like that number that you spoke about, 108, around about that level there. I think we certainly will get there. And if we break through that level, absolutely. I believe we're going to go up even higher than that, because if you look at the wave structure, if this is the, and let me pull this up right here, if this is the fourth wave over here, this is the fourth wave right here. And it's priced at this level right there. That's the fourth wave right there. And if this is the fourth wave, then normally when we hit a fifth wave right here, price moves to take out the fifth wave. So your price there at 110 looks healthy. Definitely 108 is a given. I think we can definitely get you that point there at 108. But then 110 is certainly another level that the price is going to come back up to because of the fourth wave high that we want to go ahead and take out. So I'm excited about that. Tyson, any views?
Yeah, listen, I mean, this is, I love when we're all on the same page. It doesn't surprise me that we're on the same page oftentimes. This is a brilliant looking chart. It's sitting at long-term demand. It's in a fifth wave completion. It's if we push down to those lows that you're looking at, Gary, we're highly likely to make some nice bullish divergence. And this thing is setting up perfect. I love it. I think you could start to structure a position now. One of the things that I want to mention that Chris has mentioned a few times is if you start to structure a position and it could go against you a little bit at first, make sure you have the wherewithal, the ability to continue to push the button on trades like this. So keep your entry size small. But I love this trade. I love it up to those 108, 110. I think we're singing the same tune. It's really nice.
Okay. Awesome. All right. So
Love
quickly, Chris, just your final thoughts on the news out this week. What to look out for, and we know what currency pair you're going to be focusing on. Is this the only currency pair that you're going to be focused on? Number one. Number two, does the news change anything that you're going to be doing this week?
No, I think this is the week where I definitely focus on the technicals and just kind of let the news be what it is. I mean, clearly the market's not anticipating the news, good, bad. We can't really read the data and say this is what the market's going to do because of the news. I mean, honestly, I'm looking at technicals. Let the news fall in where it's going to fall. It's going to happen. We're going to have some major events. We've got the RBNZ expected to keep rates the same at 0.25. Aussie jobs, but it's like last week. News came out, terrible numbers, everything. It was funny how the alignments on Friday, CAD jobs, U.S. jobs, were all terrible numbers, but they were all green because they weren't as bad as what was expected. So anyway, pay attention to the technicals. What I will be watching, and I'll keep a close eye on it and a tight leash on, are the yen pairs. I'm going to switch my robots around this week to look for some shorter term alignments on the yen pairs. I still remain a biased seller on yen pairs. So Aussie yen, CAD yen, Euro yen, pound yen, but they didn't cooperate. So last week, they closed above on Friday. They essentially hit my stop areas on most of them. So I'm going to get out, modify, and I'll talk about that tomorrow in my trading room. But yens are on the watch list this week. Aussie CAD's on the watch list. Euro Swiss, we've been waiting for just that confirmation. I love the Aussie dollar we talked about today. I'm trying to think what else. New Zealand dollar's one. I mean, look, as always, I'm watching every currency pair that I can. I'm watching stocks. I'm watching cryptocurrencies. I'll always be watching. And just trying to pick the best one. So if I can find a solid 3 to 5 trades this week, let's focus on it. Let's get some robots running, and let's make some great trades.
Perfect. Tyson?
Yeah, same type of thing. I'm looking at the Aussie dollar, but it's not just about the Aussie dollar. I'm looking for opportunities in the New Zealand yen on the short side, New Zealand dollar. I like the moves. I want to be conservative. I want to make sure that we wait for some of those confirmations. If I don't wait for confirmation, as an example, and I'm already in the Aussie dollar, I love the Euro Swiss. If I don't wait, then I got to make sure that if the position goes against me a little bit, am I willing to just be wrong, or is there areas where I want to add even more to it? But if I add even more, keep position size small. I think Chris is right in that these moves are going to happen. Let's just make sure that we're around to participate in the move when they actually happen. So be conservative, trade the technicals, and then have the confidence to push the button when the setups happen.
Absolutely. It's time to, and I'm going to just go ahead and add on that, guys. It's just like it's time to be patient on your trade. Don't be anxious to get in and do things unless you have a proper game plan put together like Chris has got. We're starting to put into positions and starting to commit himself to that trade, but not putting everything on the table. And that way you've got enough to be able to have buying power. That's very important. Buying power is important because if you get in and stack it in, then you stack in at small entries or small risk at first, so that when price eventually moves into a level where you feel confident to be able to add more to it, you have the buying power to do so. Very, very important. So make sure to keep equity management the number one rule in your game plan as well. With that being said, guys, go ahead and give a huge smash like button right here. Go ahead and click on the like button. Smash that like button. Make sure that you guys go ahead and comment in the actual video itself. We'll be addressing those comments in our next follow-up session, which is next week, Monday. Also, very importantly, those questions that you go ahead and post there, we'll bring them into this conversation next week. So whatever you comment in the video, we'll take those questions and use those questions to comment or discuss inside our next session, which is going to be Monday. And then also, if you haven't subscribed to this YouTube channel right now, go ahead and do that. Click on the subscribe button, click the notification button, so when we go live, you know when it's going to happen. So with that being said, Chris and Tyson, thank you very much, guys. A lot of good feedback, a lot of good information that you guys have passed on to us, so we can go ahead and take advantage of that move this week. So with that being said, we want to wish everyone a fantastic time of trading, and I've just gone ahead and shut down my screen right now, and I'll get that back up again very quickly. But we want to thank you for popping in. We want to thank you for coming around and connecting with us today, because we absolutely love this. We absolutely love having you guys here. We love the comments that are coming up. We are watching the comment box, by the way. We love the comments, and we just want you guys to continue to follow us on all social media. And very importantly, get into our trading rooms. Tyson, Chris, myself have trading rooms. We talk about these setups every single week. And we go into details not just on those currency pairs that we spoke about today, but we also speak about the currency pairs that are moving the markets as well. And I mean, we covered 28 currency pairs in our trading room. So focusing on focusing on getting into the trading rooms so you can connect with each one of us so that you can get some more information on exactly what we discuss and how we trade in those pairs that are moving the market for the week. So with that being said, guys, thank you, Chris. Thank you, Tyson. Appreciate you guys again. And we'll see everyone back again next week. This is the FX Big and the team saying, happy trading.